Hello everyone, and welcome back. It's SME. I'm gonna be your friend, your brother. Everything that symbolizes love and unity. Alright guys. So this is a continuation of the SLK series, and in this video we are gonna be talking about the we're still on building bias, and we are gonna be talking about second way to build bias. Okay. That's what we are basically going to be talking about in this particular video. So I already showed you guys on how to build bias using key levels on the first building bias video, and then this one is going to be on how to build bias using liquidity. All right, so guys, so the logic is this thing now. So the both way of building bias have one thing in common, which is called the candle closure. That's what they have in common, right? Okay, so let's dive in. Okay, I don't want to waste much time. All right, so first of all, when you're building bias, you are building from three time frame, right? You're building your bias from three time frame. Let me make this thing come bold. You're building your bias from three time frame, where either weekly, daily, 4 hours, or daily 4 hours, 1 hour, or monthly, weekly, daily, just three time frame. Okay, so first of all, let's say for example we are trying to get our weekly bias. We are building our weekly bias, and now price is, let's say this is a weekly key level that price is at. Okay, let's say like this is a weekly key level above where price is now, where we are trying to sell from. We are using a sell scenario for an example. So we are trying to sell from. So now this is what happened. Instead of price coming to this level, price comes into this level. Now the first weekly candle closed like this, and then the second one tapped, enter into this key level, and then rejected and closed. Now I told you that they have two things in common. The two ways of building bias have two things in common, which is the candle closure. The candle closure. When it comes to building bias, your candle closure is very important. It's very important, because price can be rejecting a level and still come back to take that level again. Alright, so this is the first thing. Candle price sweep previous weekly high, tapped into the weekly key level, then rejected and closed below. Rejected and closed below. This is the first thing we want to see. According to CRT, now this low now becomes our external range liquidity, because I told you that price moves in a cycle, takes internal range liquidity, and then comes back to take external range liquidity. Okay, so now price takes internal range liquidity, clear the previous weekly high, closed inside of the weekly key level, inside of the weekly candle. This low now becomes our target. All right, so this is the first thing we want to see on the daily, or sorry, on the whatever, which time frame you like calling now, on the weekly time frame, or yeah, on your weekly time frame. So once you see this on your weekly time frame, this is what you are expecting to see on the daily time frame. Now following that same way we did the other one on the daily time frame, now we are saying if we are building our bias from the weekly time frame, now on the daily time frame we want to see price do two things: a sweep of liquidity and a break of structure, or price give us a most recent breakout. Price give us a most recent breakout. So when price gives us something like this on the daily, we now know that we have three key levels that we are playing from. We have this breakout key level, this QMR, and then this apex key level here. Alright, so we're expecting price to just come into one of these key level, and then start. Then our target will now be this weekly low. We're now targeting this weekly low, just waiting for price coming back like this. Price just doing like this, maybe do something like this, come back, tap into this key level, just coming, just like you have vast market structure now, until price tick out this low, until price ticks out this particular low. Okay, that will be our final target. All right, are you getting what I'm saying now? That will be our final target. sorry, that would be more like our final target. What is this now? So that would be our final target. Let me remove this thing. All right, so I told you guys, if you watch the last one, I said if daily, if weekly, sorry, once let's say this particular candle comes into this key level, okay, this thing, this particular key candle now comes into this level, and then on the 4 hours time frame, we look for a breakout again, a breakout in that direction. Are you getting what I'm saying now? That's not what I'm saying. That's not what I'm saying. So this is what confirms this particular one. If you don't have this on the daily time frame, this particular move, some of the time, most of the time, cannot be correct. Are you getting what I'm saying? So initially, what price we just do is just tap back into this A-shaped key level and then come back to tick this particular low. Comes back to take this particular low. But when it comes to building bias, I said candle closure is very important. So you have to wait for this particular candle to close like this. So it's not you maybe just doing something like this and it's still remaining like 3 days for the week to close, and then you just map out your CRT, map up your asset. You're expecting more sales, more sales. No, you have to wait for the candle to close. So once the candle close, you want to see something like this on the daily time frame. These things right here is what will now confirm the direction of this one, because price can still do like this. At the next candle, we just take out this low and then continue in the direction using this particular candle's internal liquidity again, continue in that direction. All right, so you have to see something like this on the daily time frame or one time frame lower from that particular time frame you are beating your bias from. All right, so same way, same when you go to the 4 hours time frame. On the 4 hours time frame, you still want to see, look for a most recent breakout, or sweep of liquidity and a breakup structure. The same thing you saw on the daily, you want to also see them on the 4 hours time frame. All right, so that's just basically it, right? So now let's check for life example of what I'm saying. Now go to the weekly time frame. Go to the weekly time frame. I'm going to show you examples of what I just said. Or let's go to the monthly time frame. I think there was this thing I did on this time frame. Yeah, on this particular candle. If it candle, we call it now. This peer. So if you check this thing, check the Telegram channel. We did a little study on this particular move that happened in Euro JPY from the monthly time frame. So based on what I just said just now, if you look at what was happening on the monthly time frame, you can see first of all, this was a monthly candle. I think this was January. This was January candle, and then this was February candle. And now look at what February candle did. February candle swept January candle low, and not just that, it tapped into a monthly open close. You can see that the two ways of building bias were present here, not just one. So swept the January low, then this particular candle, February, swept January low and then closed above it. Then I told you guys, I said something, I said we have two targets here. First target is this, based on CRT, this will be our target. And then this is also another target. Right? And also you can also see this particular move, this particular eye is also another target as well. So now all these eyes will be serving as our target, but that's not it. So when price sweep out the low, the logic is that this high should still be standing, because when internal reach liquidity sweep, we expect external to go, but if price sweeps the low and sweep the high at the same time, then the both liquidity are taken, price will need to reverse to take internal again. So this particular, after the low is gone, this high need to be standing, and that was what happened. You can see that this high price has not swept the high, price swept the low and then closed inside of it. So this particular candle now, before this candle even came, let's even assume that this candle was not here, this particular candle was not here. So I told you guys that on the next, like one time frame lower from this particular time frame, we need to see like a breakout on that time frame to confirm this particular move and this direction. Okay, so if you go to the weekly time frame, if you go to the weekly time frame, should go to the weekly time frame. Although there was no much like a breakout on the weekly time frame, there was not a clear breakout on the weekly time frame. But apart from that, I told them that we are playing it from the from the weekly. Now if you are looking at it from the weekly, don't forget that it's still a CRT, still a candle sweep on the monthly time frame. But looking at it from the weekly, when you are looking at it from the weekly, let me remove this thing. When you are looking at it from the weekly, playing it from the weekly, we want daily to give us a confirmation of everything that is going here. Then come down to the daily time frame. That was when the breakout now happened on the daily time frame. The breakout now happened on the daily time frame. This was the first breakout, second breakout. Although the overall breakout, the external breakout has not happened, which is this high. Until price takes out this high before the whole move will be confirmed, which is the weekly breakout. So because the weekly breakout has not formed, price is still rallying in that direction, but this high, even if I want to be targeting anything, I'll be paying attention to this weekly high, this particular weekly high, because weekly has not fully, oh sorry, this particular weekly has not fully confirmed the direction of the monthly CRT. But if you are playing it from the monthly, you can see where this whole move started from. But I want to look for like a clear one. Yep, a clear one. Now look at this. Let's play this. Let's look at this one. So look at this. I said after the sweep, after price sweeping this high or the low, make sure that this particular low is still standing. This particular low needs to still be standing. So once that particular low is still standing, meaning that there's still liquidity here that price will likely go and take. But when price takes out this move, let's say price already take out this low, price will need to go back again, maybe coming back to take out this particular one before continuing the move again. So this, after this high is taken, this low needs to still be standing. And not just that, you drop one time frame to look for your breakout, and if you check this particular move, this was where the breakout happened. Now you can see where the breakout happened from on the 4 hours time frame. This was where the breakout happened from, not just 4 hours, like a sweep of liquidity and then a breakout. Go to the line chart, you're going to see it. That was where the breakout happened from, this particular move here. That was where the breakout happened from. Now this low now becomes our initial target. This is our initial target. So all you need to do now is, okay, drop to the 1 hour, and then from there you follow it with your entry mode and the rest of them, just following the move just like that and going to where you are going to. Looking at this now, this was another 1 hour breakout. This was another 1 hour breakout, and if you check very way, that was where price reacted from to this low. I'm not teaching about entry model. So there was a move on you Japan 225. I saw it this morning when I was checking something. So this was still the same thing that happened. Where is it? So now this is it. If you check this particular move, some of the time you won't even know that this particular thing also is CRT. So look at this move now. Price swept the low, this particular low, price swept it. Not just that, price tapped into a key level. You are not just blindly doing it to price tapped into a key level, a daily key level now. Price then created CRT, swept the low, the high was still standing. Swept the low, the high was still standing. So this high automatically now becomes your target. It now becomes your target. So I said after the low is swept, drop one time frame lower to look for your sweep of liquidity and a break of structure. And if you check very well, what happened here after the low was swept. Okay, where is the low? Yeah, this one. This was the low. Price gave us a breakout from this level. Price gave us a breakout from this level, and that breakout was where price came back to. Price came back to that level and then reacted from it. If you check this high, price came back to take this particular high, this liquidity, and immediately price took the liquidity. Price started going down again. Price started going down. That was what happened. If you also check, I think it was this particular pair again. Okay, now look at this one. The same thing still happening here. This was Thursday, Wednesday this week. So this particular candle, don't forget that you need to pay attention to market structure first. Which direction is price going? You can look, if you look at this from the daily, the most recent breakout on the daily was still a bearish breakout. So automatically this gives us a direction that we are still bearish based on the daily time frame. I don't want to go much into the weekly time frame. You can go and do your findings. Alright, so it was still bearish. Price reacted from it and closed below. Not just that, now price came here. This was Tuesday. Tuesday candle closed like this, and Wednesday candle now did something like this, swept Tuesday and closed below. Swept Tuesday and closed below. Not just that, this particular low was still standing. This particular low was still standing. If you can have something like this, you can see that for Thursday and Friday, you already know the direction of which price is going to. For Thursday, Friday, you know that you're just going to be selling this particular pair until this low is taken. Until that low is taken. So the low is still standing. Then after this, you drop to your 4 hours time frame. Now, because we are building it from daily, that's why you are going to 4 hours. If you are building it from weekly, you go to daily. So on the 4 hours time frame, price now give us a breakout. Price now give us a breakout. You can go to the line chart to always look for your breakout if you cannot find it, because some of the time the charts can be messy. So you go to your lower time frame or line chart, you can look for your breakout. Now price give us a breakout, confirming the direction. And not just that, checking this from the 4 hours time frame. 4 hours still gave us the same thing, sweep of previous 4 hour candle. The low is still standing. This was the low was still standing before this move, this particular candle, this one, sorry, before this particular candle came, this one. So the same thing still happen here. Now this one is also more like a confirmation for you again that price is continuing in that direction. So price gave us a breakout, confirming the direction. So from there you can follow it from with your entry model. Follow your sales from with your entry model, and then this low will now be your target. This low will now be your target. See, look at where the breakout happened from. The breakout happened from here. So say the breakout happened from. If you go to your 1 hour, that's when maybe you now see your entry model. Follow it with your entry model from this level, and then you just continue like that. So an entry, there was another entry here again. This particular entry, I'm not teaching about entry. You can go and use your entry model. So that was it. You can see that the low has been taken. Price took out the low. Price took out the low. Just like that. Price took out the low. Let me see if I can see one last example. Now look at this on BTC now. On BTC, the same thing still happened. This was on Tuesday. This was Tuesday, Wednesday sweep. said before this, pay attention to your market structure. Pay attention to your market structure. The last daily breakout was bearish breakout. So because of that, we are still bearish. Somehow still bearish, yes. Because of the breakout. If you go to the weekly time frame, you will see why we are bearish, but pay attention to the daily. So now the same thing. This was Tuesday candle. Wednesday swept it and closed below it. The low was still standing. Don't forget that market structure, based on market structure, we are still bearish. If market structure was bullish, I will not be looking for a bearish CRT. If market structure is bullish, so you pay attention to market structure first, then before trying to build your bias in that direction of the market structure. Are you getting me now? So now, a sweep, a close below, a sweep, a close below. The low was still standing. This low was still standing, and you can see Thursday just tapped into that level and then came back to close, take out the low. Are you getting me? Came back to take out the low. And you can see not just that, price followed it with a breakout, followed it with a breakout. Price followed it with a breakout. Price followed it with a breakout. From there, you look for your entry mode there and just play price in that direction. You play price in that direction, and then the low was taken. Price since then, price has been dumping. Price is still dumping. Price is still dumping. Price is still dumping. So you can just go and do your back test it, check your entry model, how often does it play using it at the same time. Check for all those things, your back test it, check how often does it appear on the chart and all those kind of things. So you know if you can add it to your model, or you just leave it. Alright, so have a nice day.